Hey, welcome back to Weenie Trades. In this video, I'm going to be giving out the weekly game plan. So I'm just going to be giving a brief ETF overview, and then I'm going to be breaking down stocks from the community. So let's get right into the video. SPY, let's start with the S&P 500. SPY, nice good breakout, but it's just happening on really low volume. So we're making higher prices on lower volume. Generally, that means it could be weak. It could step over. To me, the risk to reward is not to be buying SPY. The time to be buying SPY was at the breakout level or the back test of the breakout level. Now that we're breaking out, it's kind of like, risk to reward's a little bit weak. Now, I'm talking about low volume on the SPY, but the SPY has gone up for many, many years on low volume. The SPY is like notorious for going up on low volume periods. But the thing is, this short term, it's kind of like, the risk to reward, just definitely not there. The reason SPY's risk to reward is really bad is because if I extend this trend line to the right, it's just at resistance. So this is trending resistance. We had a high, we had a higher high without a lot of follow through. Are we going to get another higher high and snap back in? If so, we need to be watching the former breakout area, call it 440. If SPY can blow through that resistance, that could still be a scenario where it's a blow off top and then hits resistance and then sells off sharply, where we start to go parabolic, then we can snap back down really hard. So that's why the risk to reward is not to be going long unless you're already long. So SPY, in my opinion, it's a hold, keeping my eyes peeled for any potential weakness on the SPY. Let's check out the QQQ. The Qs, I talked about how we had this rising wedge. We have made a high, another higher high without a lot of follow through, another higher high barely without a lot of follow through, then we sold off. We broke the rising wedge to the downside, but we just put in a nice good higher low pivot. So HL. So I'm going to be bullish on the Qs. QQQ bullish, but could sell off. Sometimes when we're looking at this rising wedge, we can back test it and then sell off. So keeping an eye out on the Qs. Let's check out IWM. IWM just sideways, looking a little bit more weak. We have our, high, triple top, lower high, lower high. So the short-term, medium-term trend is down, but overall it's just sideways, nothing too much going on here. This is the mother of all sideways trends. And now it's still technically a bull flag. We could have multi-weeks of upside on the IWM if we take out those all-time highs. And it has a good volume breakout with clear follow through. We're still in that summer market where things look to still be going sideways. So in terms of option strategies, most of the time I'm going to be looking at credit spreads, either bear call credit spreads or bull put credit spreads, maybe a few iron condors, but that's only good on highly liquid stocks. So that's the IWM. Let's check out Bitcoin. Bitcoin /BTC having a nice good run. Talked about once we jabbed, we made a quick lower low without a lot of follow through. Boom, Bitcoin's set to kind of take off a little bit. It's already taking off though, that's the thing. So nice good move higher, we pull back, nice good healthy retracement at 37K. I talked about that 45K. That was resistance for a couple of days, but now we're starting to break out yet again. Do we see? Move higher, bull flag. Now we're starting to ignite. So where's the next resistance? Well, the next resistance is this breakdown area. So I'm just going to grab this little zone. Where'd we interact quite a bit from? 52K up to 50K. That seems to be the next resistance area for Bitcoin, especially as we're holding above 45K. So if we're above 45K, expect that to go to 50 to 52. No guarantees, but that's just the next kind of segue over the next coming days and or weeks. And if we get underneath 45K, look for the previous breakdown area or breakout area, which is about 40K. So Bitcoin constructive. I'm still bullish Bitcoin long term, even during this crappy sideways consolidation. Long term, it's good. Short term, the risk reward not worth it. Might be due for a pullback. Again, none of this is financial advice. Anything can happen. I'm just giving out these different scenarios and what I see on the charts. VIX, nothing much. The fear is really low. So as long as the fear is low and nobody wants to sell their stocks, there's not mass panic in the marketplace, stocks aren't going to sell off too much. So that's something to keep an eye out as well. So that's the ETF overview. Now let's get into the stocks to break down from the community. So let's check out NEO. NEO looking a little bit more bearish now. I've been saying 43 has been the key level for it to hold. And why 43? Well, 43 has had a ton of interaction. As you can see, we break out above 43. We hold it as support. We break out again. Holds that support. Okay, we get underneath it. It's kind of struggling. Okay, we get above it. We're good. And it's just more of a reference point. It's a pivot point where I'm a bear on NEO below 43. And up here, I'm a bull on NEO. I have to have a pivot point at some point. And that 43 is going to be the number 2 watch for NEO. So far, this looks like a rollover formation. We have a high, lower high, lower high, another lower high. Generally, that means, hey, we could make a lower low. Again, though, NEO, I wouldn't say it's bearish yet. It's more so just sideways in the trading range between 30 and 50. 30 to 55. So NEO, you wouldn't want NEO to be taking out 39.33, especially if you're a bull. If you're a bear, hey, that's good. So there's 2 sides to every coin. If it was just as easy as we could just buy a stock and go all in and just hold it and just make money, it's not as easy as that. And that's why there's bulls and bears in the marketplace. Our next request is on NVIDIA. And by the way, these are daily candles. We talked about NVIDIA, how being up there, it's likely going to sell off into some resistance and pull back to the former breakout area. Well, NVIDIA did just that. We had a nice good flag. We popped out. And then we pulled back into the former breakout area. I was saying, 199 might be a good dip buy area. It was a potentially good dip buy area. It's up 2 or 3 points from that area. So NVIDIA coming up higher. Now, based off equilibriums, we have our high, low. Because of the steepness of this sell-off, we would be expecting a lower high, and at least looking for one. That's the highest likely scenario, and that lower high could probably come underneath 205. So what does that mean? If NVIDIA is getting above 205 and holding, it could be breaking out for all-time highs. If NVIDIA is beneath 205, it could be a rejection. And if this bounce is really good, we'd be expecting a higher low, because a good bounce means, hey, there's buyers at each point in time that thought that it was a good price on that way up. You'd expect there to be still some buyers if it were to pull back, extended into a little bit of resistance. So as long as NVIDIA is above, call it 200, so I'm pretty bullish. Love the stock, love the company. Watch out for earnings coming up. Looks like earnings is on the 18th. So would love to trade this after earnings, up until earnings. Look for just a tightening range and equilibrium. So that's NVIDIA. Next up, we've got RIOT, and RIOT had this nice good equilibrium that broke bearish. We had our high, low, lower high, higher low, lower high, bear break, kickback rally into resistance and still dropping. A little bit of a counter trend, just kind of choppy. So RIOT, it's kind of all over the place on the daily chart. If we look at the recent price action, this was constructive. We moved up, we did a nice good bull flag, and then we broke that bull flag. Now we came back to back test the bull flag, and it held, but now we're coming right back down. Generally, you don't want it to be coming back down. So I'm just going to be leaning neutral on RIOT because there's some bullish factors, there's some bearish factors. I don't really see the stock breaking out either way. It would likely start to get some legs if it could get above 40.54. But even then, there's quite a bit of resistance at 42.50, 44.80. And even then, there's a lot of resistance from the breakdown area from 50 to 52. So RIOT leaning kind of more sideways based off what I see. In terms of the shorter term trend, I would like these higher lows to hold up just generally. Doesn't have to hold perfectly and then bounce. It could come a little bit deeper and then bounce. But RIOT, bullish above 40, bearish beneath, probably bearish underneath 30. That would be very bad news for RIOT. Next up we've got is GameStop, and GameStop looks a little bit more bearish to me. We have our high, we have our lower high, another lower high, basically a double top. And I remember this day over here, this big doji day. It was the day Roblox had IPO'd, and it was very interesting. We called the high of the day and the low of the day as it happened live. And boy, I was in GameStop. I'm glad I had a stop loss up there to take profits as it just sharply reversed. But GameStop, I mean, I don't see anything too interesting with this stock. I mean, it's going to have some good intraday moves, but on the daily time frame, we talked about it going down to this 140, 135 area. We bounced a little bit short, 148. Now we're just going sideways. Nothing interesting on GameStop. I have an alert set over 200. That's where it gets interesting for a potential another squeeze. But even then, I think all the squeezes now are going to get faded. GameStop, I don't know. Remember, we need new buyers for the stock to actually go higher. So if we don't get new buyers, GameStop's going to go to its intrinsic value, which is well underneath $100 a share. And that's being extremely generous. Again, there's a lot more factors at hand, but based off this chart pattern, this is bearish. We have a drop, descending triangle, breakdown, back test, breakdown, back test, and we're still just breaking down. So GameStop, short term, I mean, we have this range, a lot of upper wicks at 165. If we take out 165, we could get to that potentially 180. I don't think GameStop ever sees above 200 again. I don't like making bold claims like that. It's kind of useless, but that's just based off the visuals of the chart. And GameStop, again, is still even more bearish underneath 155. And that's this bottom end of the range. So keep an eye out on GameStop. Nothing too interesting on it in my personal opinion, but hey, do what you think is best for you and your account. Next up we got is Tesla, TSLA. Tesla, very whippy Friday. If we look at the Friday's price action, boy, look at that. Whip up, whip down, pennant, pop, right into resistance, sells all the way off into support, bounces off support, just kind of going sideways. So Tesla, I'm going to be bullish on Tesla if we can hold above this 725, but really the breakout level is 730. Then I think Tesla could get something up to like 750 or higher. Again, Tesla's going to be very sensitive to the overall market. Short term, the bulls want a support of 700 to hold. If Tesla starts to get underneath 700, we might start coming back down into this range and test 660. So are we a range-bound market or are we a breakout market? Tesla needs some volume and price confirmation to get fully out there. So watch out for that 660 if we get underneath 700. Watch out short term. If we can hold above 725, we're bullish. And ideally above 730, even more bullish. But even then, there's a lot of muck on Tesla. So Tesla, not my favorite trade, not the worst trade, but looking out for a lot of resistance in the 750s and 777s if it gets up there anytime soon. So that's Tesla. Let's check out AMD. Advanced Micro Devices. Last week I was saying I was looking for a dip buy in AMD at about 105. Shame on me for not taking that trade. I missed that one. But AMD, nice good bull pullback. You know, breakout over that 100, breakout, pulls back. I'd be bullish on AMD. And you know, as long as it's holding above 105, I'm really bullish. And even if AMD does come down, it's a dip buy in my opinion at that 100 level because that represents the old all-time highs. But based off this chart pattern, we're likely to see a high, a low. AMD's likely to push up. It doesn't have to, but that's just the most likely scenario. But we would be expecting a lower high somewhere underneath 118. I wouldn't expect AMD to get much above 120 this week. However, long term, very bullish on AMD, looking for multi-weeks and multi-months of upside because of the monthly bull flag. So keep an eye out on AMD, like the stock. Timing is going to be critical for AMD depending on what you're looking to do with it, whether it be swing trading or investing. Next up we got is Square. Square made new all-time highs. Hey, that's awesome. Nice good monthly pennant breakout. I've been talking about Square religiously for a very long time, and I think it is a great stock and a great company. So as long as Square can hold some of this previous breakout area, I think Square is more bullish than it is bearish. So if Square's coming down into, 262, maybe something of the sort, as long as actually we need to be holding 265. And the reason for that is this was a big bull flag into a pop. We want to be holding this breakup candle low, which is at about 266. So 266 is that key price level on Square short term. If that doesn't hold, we could get a quick drop, probably into the 255s area. But if that price level holds, I'd expect Square to probably go sideways to slightly higher. Again, I love the stock. They're a great stock. Check out my presentation on Square. It's such a great company. But just because it's a great company doesn't mean it has to go up today or tomorrow, next week or next month. I was saying the same thing about Square when Square is, back over here, and Square just had to do an equilibrium and had to chop around a little bit. So sometimes things might take a little bit more time. But keep an eye out on that 265 level for Square and look for multi-months of upside. Again, not financial advice, nothing has to happen. Square could absolutely get clapped. I think that's the least likely scenario, but Square could get clapped, especially if we break out and then it's a false breakout and then buyers are trapped and then we do something like that. So always be open to both sides of the coin and both sides of the position. Don't want to sell yourself a position, but you want to find that balance of capitalizing on the upside as well. AIG was requested from TLAC. Shout out to TLAC for following Weenie Trades for so many months, if not over a year at least. So definitely an OG. Great stock on the daily time frame. Higher highs, higher lows. I like what your eye for value over here. Nice good little pennant breakout. Do you see that? We have our lower highs connected. Once we break those lower highs, we get a little bit of an increase in volume. We start to go. So now we're extended into all-time highs. So this isn't exactly the buy price, in my opinion. Ideally, I'd like it to stay above $52, and that has to do with this breakdown candle high right here. If we could hold above that, that would be a nice, good, healthy retracement, and we could continue the uptrend on AIG. If we look at the weekly time frame, still a lot of resistance up here, which could present a problem. And so watch out in this whole upper zone from 58.26 to right now. This is all supply, all resistance. That marked a huge virus drop all the way down to 16. Wow, there's a lot of bargains. It seems like every stock. In terms of the monthly, not sure if this is going through a ton of reverse splits or not, but just be careful on the monthly. Monthly doesn't look good at face value, but the trends, the short-term trends are all up. Stock looks more bullish than it does bearish on AIG. Next up, let's check out NVAX, NVAX. NVAX is the trade of the week last week. This is a really good move. Wow. Awesome stuff. So, NVAX broke out. Consolidation, wow, broke out, held on top of it. NVAX looks really bullish to me. 266 is going to be another breakout area, and we're already, if we can get above 262, I think that's the breakout actually. So not 265, 262, and the reason for that is, look, we had this nice good high, we sold off. Okay, if we can get above that, hey, we can test this next zone over here, and that has to probably be about 286 up to 292. So bullish on NVAX. We've had all the opportunity to sell off, and we didn't. What does that mean? Bullish. Just be careful, though. The spreads are very wide on this stock. Depends on if you're going to short-term trade or invest in it. I'm not very well versed in the long-term fundamentals of NVAX. So, but a short-term swing trade could be intact. Again, though, risk to reward. Where's the stop loss go? Stop loss at this point, I would want it underneath, 243.50. So that's $10 to $13 of downside. Could you get at least $13 on the upside for the 1-to-1 risk to reward if you're perfect? Or are you going to go for something like 2-to-1, that $23, $26? That might be the way to go. And again, that's still a tricky trade if you ask me, especially due to the spread. So watch out on NVAX. Sideways to slightly higher looks to be the most likely scenario in my personal humble opinion. Next up we've got is AMC. And AMC really needs to get some more buyers if it wants to break out. AMC is, I haven't spent too much time paying attention or watching AMC because there's been no reason to. It's just been in a tight trading range, going back and forth. Again, though, for AMC, it needs to get above 37.74 for it to have a chance to be bullish and continue up and test that 40. Otherwise, AMC, look for this to go sideways to slightly lower because we keep making lower highs and lower lows. Lower high, lower low. Lower high, double bottom. Okay, if we can get the momentum change because of that double bottom, it needs to go now. Otherwise, if AMC is coming underneath 30, that's going to be pretty bearish, and AMC could probably drop like 5 to 10 points, and that would be bearish. Otherwise, I think there are enough apes and diamond handers in this to really just make it go sideways. So expect a lot of sideways action on AMC. Bearish beneath 30, slightly bullish above 35 to 37, but really not. I wouldn't take that long trade. There could be a lot of people looking to sell as AMC pops, and it's great liquidity to get your shares filled when something pops, especially if you've got quite a bit of them, which there's a lot of people that might be a little bit oversized in AMC and might be trapped. Again, though, hey, if there is going to be a squeeze, I'm all for it. Congrats to all the bulls. I'll join you in the squeeze once I see the squeeze, but I don't see it. So it already did a really good squeeze. Most of the time they don't do it again, but I hope it does, especially if you're in it. I wish nothing but the best. Not spreading fear, uncertainty, or doubt, just analyzing the charts objectively. CLF, will it break down or not? CLF, that's really tough the question to ask because CLF, it's so far up there. It's still an uptrend, but we got a doji day on Friday. What's the risk to reward? If you're already in CLF, it's probably a hold. If you're not in CLF already, CLF is not a buy in my personal opinion, and CLF could just go sideways to slightly lower. All the moves have already been had. We had a jab right there, and then we had a bull flag that popped very nicely into higher highs. We back tested the bull flag, and then we made another higher high. How much confirmation is necessary before you jump in and you actually buy the top? So that's something to think about on CLF. Not saying I'm bearish on it by any means. It's just tough to say bullish or bearish, although we are in a nice good weekly uptrend, higher highs, higher lows. CLF, if it wants to, could just test trending resistance, which would be all the way up there at 28. So that would be the next resistance for CLF. Otherwise, short-term bullish above 25 and bearish underneath 23.50 for CLF. Next up, let's check out MT. MT, nice good weekly all-time highs. Daily chart had a nice good bull flag. Again, when you're at all-time highs, you know, it's kind of like if you're already in, it's like a hold. But if you're not already in, it's a hold you might want to take half profits off. Not financial advice. You know, anything can happen. It's just all about position management and risk management. But nice good flag pop. Now, are we going to backtest the flag? That looks like the most likely scenario based off my opinion. Otherwise, it could just go sideways in time. Otherwise, if it does creep higher, the risk to reward is not really there. But MT, daily highs, all-time highs, great. What tends to make daily highs and all-time highs? Oh, not all-time highs. Looks like the monthly is a little bit damaged. So based off the monthly chart, the next area of resistance is going to be about this area, 41.80 up to 51.84 on MT. Next up we got is Disney. Disney reported pretty decent earnings. However, the market didn't really like it. Disney was pricing in a $7 move, and it moved up $7 and then just dumped all day. So what happens when we just dump all day? Well, that's not exactly bullish. However, we are pretty oversold. So look at this candle, this daily candle, gapped up. Disney finished the day up 1%, but closed all the way at the lows. This, ladies and gentlemen, is a reversal candle. It doesn't mean Disney has to sell off, but it means Disney's weak. Disney was really weak. Nobody wanted to buy Disney on Friday. Disney just strong downtrend all day. Wow, congrats to the short sellers that shorted the good news. I mean, oh boy. Disney on the weekly time frame really needs to hold this area though if this is to curl higher. So Disney, you know, short term, because of how oversold we are expecting a little short-term bounce. So if Disney gaps down, look for a potential bounce trade. If Disney gaps up, look for a potential drop on Disney. So those are my scenarios on Disney. Disney, it really needs to hold 180 for it to have a chance at life and even getting above $200 by the end of the year. If not, Disney looks to be in trouble. You don't want it closing daily beneath this gap. And gaps, everybody has a different opinion on them. Whatever works best for you. I found that gaps are great reference points for closing prices on stocks. So that gap is, let's just call it 179. If Disney closes daily underneath 179, that would be a jab and a recapture back into this trading range and potentially even lower. I like Disney. I like the stock. I like the company in some areas, less than others. But in terms of Disney, that 179 is going to be key. If Disney can hold above this 185 to 186.28, then it's go time. It's breakout time for Disney, even though Disney's not much of a breakout stock. So Disney, weak, really needs to get its keister going. Kind of just, and because there's bullish factors and there's bearish factors, sideways is usually the math equation that comes out. So bull plus bear equals sideways. That's Disney. Let's check out Starbucks. Starbucks, amazing trade we had on Starbucks from 109 all the way into 120s. Boy, that was awesome. Starbucks even pulled back tested the former breakout area, and then continued even higher. Now we've come all the way back down to the former breakout area. Can we hold? As long as Starbucks is holding 115.50, I think Starbucks can move higher to test resistance, which would be up at about 118.50. Otherwise, if Starbucks can hold above, I'm not going to be looking for breakouts or anything good on Starbucks until we're above 120. Starbucks, nice good slow mover, pays a good dividend. I think it's a great beginner trading stock, just the way it moves, tight liquidity, everything I like about Starbucks. Again, though, because we pulled back so much from the highs, looks like earnings was the catalyst potentially. Because we pulled back so much, yeah, I wouldn't be too interested for a while. We might get something like an equilibrium, and then we can break out. Otherwise, the equilibrium could break to the downside, especially if there's a hefty market correction. Otherwise, look for, if we make a lower low, look for just choppiness and, potential sidewaysness on Starbucks. I am still long on Google. I have this call option, and so Google basically is my favorite tech stock from the Qs. And not a lot of people are talking about it, but this is a nice, good potential cup and handle. move higher, pull back, cup handle, breakout. And again, just because there's a cup and handle pattern does not mean that Google is going to break out. I can totally be wrong. We could hit resistance and then snap back in. We could still be within a range. And I would eat a lot of theta decay on this call option. However, if Google breaks out and starts to clear and starts to really clear those all-time highs and go much significantly higher past the expected move this week of, $50, if Google goes $50 higher, boom, that call option is cooking. Every $10 it goes into the money, it's starting to make about $1,000 as I approach that 1.0 delta. So hopefully you guys enjoyed the weekly game plan, the ETF overview, what I'm trading, Google, and then what stocks the community wanted me to break down. Alrighty, see you guys tomorrow at the live stream. Thanks for tuning in. Bye-bye.